Take us through, first off, how this deal works, because they're selling their U.S. brands to a joint venture that already owns, I believe, some European brands in order to take on Unilever.
That's correct. They sold their Western European businesses to Froneri in a joint venture 10 years ago or more, and they sort of formalised that in 2016. So if you looked at the sort of global ice cream market, they were number 2 and number 3. So putting the US business in there will give them a shy 10% share against Unilever's 18%. And it gives them a chance then to compete and bring out new products, which is essential, frankly, in that market and any food market at the moment, to actually compete with the Walls brand from Unilever.
What will they do with the cash then, Duncan?
Good question. They've already got the buyback in place, which they upped in November. I think it'll be just investing behind their core businesses, so that's pet food, coffee, water and nutrition basically. So any opportunities there, they will invest.
So it sounds like part of an ongoing plan, which leads me to ask, Duncan, are there other things that they want to sell? What does the future of M&A look like for Nestle?
Well, I think I've just mentioned their 4 key areas, and since Mark Schneider joined a couple of years ago now, he's really focused on that core. So you've probably got about another 20 to 30% of the business that has to have a clear plan of where they're going, or it could come under pressure. And I suppose the key ones there would be their cereals joint venture with General Mills, Cereal Partners Worldwide. Sugar confectionery, they're certainly not number 1 or number 2, which is really what they want. So, you know, they've got strong businesses in some markets, but it's certainly not a complete business. So those would be the areas where they've got to have a clear plan of how they're going to grow, or frankly, they may well take the cash and invest them somewhere else.